Hey, listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available? Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today is October 17th, 2024. And today on our call, we have the CEO, Bill Besenhofer from the Fresh Factory. The Fresh Factory trades on the Toronto Stock Venture Exchange under the symbol FRSH. The company is currently trading at 91 cents with about 52 million shares outstanding or about a $47.5 million market cap. I'd now like to hand it over to Paul Andriola.
Trevor, thanks a lot. Bill, welcome to our group discussion today. The Fresh Factory company that, we've had a discussion, but I'm pretty sure is going to be relatively new to our audience. So happy to have you here and happy to obviously learn a little bit more about the business. Listen, you got a presentation up and ready to go, so I'm just going to hand it over to you.
Sounds great. Well, thank you guys so much, Trevor and Paul. I really appreciate the opportunity to talk with everybody out there today. We're going to go through a quick deck here to kind of give you guys a really who the Fresh Factory is and how we kind of came to be. And then I'd love to have questions as we kind of get through this at the end to be able to answer anything that you might have. As I was talking to Paul and even Trevor, we've got a lot of good things going on right now, and I want to make sure I can get everybody the information and can be excited as excited as I am about what we're building here at the Fresh Factory. So with that being said, so who's the Fresh Factory? So really our mission is to build the infrastructure for the future of food and bev, and doing that in an honest way, a sustainable way. And when I talk about honest, I think that everyone's pretty much aware of what's been on in the industry as it relates to food in general, and that there are preservatives, additives, and things of that nature. And really for us, and the vision for us is really just become the premier manufacturer for cleaner label, better for you, plant-based, food and beverage for the entire industry. And so what we've been able to do is really build like a platform from farm to shelf to be able to get that to the end consumer. And it's funny, I put a little stat here, just today, more than 57,000 people will have a product that we've made. And clearly we're just getting started. Now, when we do this and we talk about how we kind of came to be, it all starts with our values. It always starts with safety and quality. We have the utmost safety and quality at our facilities. And you've got two, and we'll get into that a little bit further into the presentation. But then it goes into innovation because it's hard. Manufacturing in general is hard. Food manufacturing is even harder. And then when you get into the food and bev that we're doing, which is the clean space, it's extremely hard. So with that, there's a lot of innovation that needs to happen. And again, with our value, we want to make original and inspiring food. And now how do we do that? Well, we're getting better every day. It's through excellence. It's driving efficiencies, as we'll see in our margins. It's figuring out ways from a manufacturing perspective to be more efficient with our time and our machines. And then again, it's integrity and respect. We do what we say, and we treat others how we want to be treated. That's internally and externally. And, taking that throughout our organization, we have people that care. So we care and we solve a lot of problems, and then we grow with our customers. And then sustainability. Sustainability is a word that is obviously thrown out there quite a bit by a lot of companies. We truly do try to live by that and are continuing to try to grow out our sustainability from an environmental perspective, but it also means financial sustainability. I think, as an investor myself, just like everybody else that's out there, it could have been a pretty rough couple of years as it relates to maybe even the sector that we're in. But thankfully for us, we've done some things to put ourselves in a really, really nice position as we continue to keep growing our EBITDA as well as our revenue on a pretty rapid pace. So what was the opportunity? How did this whole thing really get started? Well, again, legacy infrastructure within the United States, a lot of the manufacturers that were out there, and in my background, I came from the venture capital world. We saw a lot of deals in the food space that had companies that were looking to make better for you food. The one thing that they couldn't find are people to manufacture it, because a lot of the legacy infrastructure that's out there are larger manufacturing facilities that have massive minimums. They take a long time. You have to have certain packaging, and they all have to have additive and preservatives. So they don't have the expertise of dealing with, fruits and vegetables that are fresh, that can go quickly if you don't process them and create and make it into food. And so what we saw was that there's this massive open opportunity. So what was the market looking for? And so what we started seeing is, man, there were lots of brands, from the mom and pops of the world all the way up to the publicly traded companies, looking for a place to go to be able to have the speed to take new products that are mostly refrigerated, because you're in that fresh space, and bring them to market in a very, very quick way. That legacy infrastructure wasn't out there. And so what would take, months to years to get things processed and put on shelf, we've been able to figure out how we could do that in weeks to months. So herein lies what we've helped to do, which is really, help build the future of food and beverage. And again, we've done that in a unique way, from all the way from our supply chain all the way till products getting on shelf. And I've got a slide in here in a second that we'll take a look at those in particular. But it also allows us to have, a diversified manufacturing. We've got the ability to do a multitude of things across a multitude of SKUs and products. So we built out this infrastructure with the thought that, look, not everybody's going to just make one salad dressing. They're not going to want to have one bottle. Yes, in reality, in manufacturing principles, where I came from as a Lean Six Sigma black belt, you want to have one bottle and you want to make it as quickly and as efficient as possible. However, what we were seeing in the marketplace is that people didn't necessarily always want to just have one bottle. Honestly, they wanted to have multiple things. So not only do they want to have one bottle, they want to have multiple SKUs, because they were building brands, because brands were growing are growing at a rapid pace. And so we talk about this vertically integrated platform. For us, it really starts with our innovation, with our food scientists. We've got 5 food scientists on staff who have expertise in the fresh, clean, better for you, plant-based space, that help us build out all the lines that we have currently. It then goes into our supply chain, where we've got partnerships with farmers all across the United States, as well as vendors in the packaging, where it honestly came in handy quite a bit as COVID came through. We were able to have those partnerships. Because of those, we were able to pivot and be able to get packaging in for our customers, whereas others were not able to get it in quick enough in time to meet launches. For one in particular, a customer going into Walmart during that time. So having that, very big. And then it moves into our manufacturing, like I mentioned, very flexible. Having the highest form of food safety in the industry, which is an SQF level 3, which is similar to like BRC, if you're familiar with that. But we've built this flexible platform so that we could actually allow ourselves to make multiple different SKUs for a customer. And then we move into our fulfillment, where we can pick, pack, and ship the product. We take advantage of the opportunity of making multiple different customers, putting them on the same trucks, as we are located right outside of Chicago, and making ourselves available to put that all on one truck. If we have to go to the West Coast, East Coast, Southwest, Southeast, wherever it may be, we're able to help take that in-house as with a logistics team to be able to handle that for our customers and also save them money. And then we get into our financing, where we're able to work with brands and or even large companies, where we're helping them, whether it be on their terms from a capital perspective, or we help them with vendor financing, things of that nature that they may need as they start to grow and build their business. And then we take it all the way to the end, where we help get them on shelf. We've got our in-house sales team that helps them with the brand and or the rollout of it. That's part of our commercialization team as well, to make sure that we give them the best possible chance for success. I think one of the things is, as we got into it, it's really hard. There are high barriers to entry into the space. And as soon as you get someone as a customer, especially in the manufacturing space within the healthy food, it's extremely expensive to try to leave. So we become very sticky. And I'll give an example. We do a lot of like direct to consumer products for large companies. Those large direct to consumer customers have a multitude of products that they have across the board. We make quite a few of the products that are there. Now, when I say that, it may start out with a cold press shot. That's a 2-ounce shot. That then leads into other categories that they may want, like a refrigerated bar that we make. That's a healthy, better for you refrigerated bar. Or they may do salads as well, and we can produce salad dressings for them in 2-ounce little cups so that they can put into a kit. And I think one of the things is, as we partnered with these customers and we help them grow, we start with something, but then it continues to grow into even more because of the ability of the flexibility that we have. So in doing that, this customer comes to us, they don't have to worry about any operations. They know that they can trust us to be able to help scale up their operation, but it also helps us because of the volume that we start to get and the amount of customers that we have. We can then scale up our operations as well as we get a ton of margin opportunity there. Because if we're buying, let's say, call it apples for one customer, we've got the ability to now take a look and say, look, we're doing a multitude of things. We can do this for other customers. We add that together. We have buying power at basic economics, quite frankly, and allows us to expand and grow. As we start to do that and we start to work with customers, again, there's data that we collect. It's the data that we're starting to see that we then can move on and invest in other opportunities that are out there, which again, it allows us to create this flywheel effect where as we partner with brands and we take over their operations, we help them grow, and then it allows us to partner with other brands to offer other opportunities, other ideas, new products, new things that are coming out there, whether it be a flavor, Edelberry, right? Edelberry was something that was really big within during COVID. And one of those things is we were able to create juices that had Edelberry in it. So that would actually help with the immunity of people as they started to take and buy some of those drinks. So again, it gets back to like, what's the power of the vertical integration? It's at the high level, it's margin expansion for us. Again, it's the purchasing power, it's the distribution power that we have by partnering with our customers and allowing ourselves to be able to get product to across the United States at a cheaper price, while the trucking, transportation, very expensive over the last few years. So that now that you're able to actually take trucks and put product together for customers, it helps them out immensely. Again, and into, our diversification, there are thousands and thousands of food and beverage products that are launched every year. And most of them fail, but by us being diversified, that minimizes the risk that we have, with, just one customer in itself. So, one of the things that we did as well as we took the background, my partner and I, of our VC background, one of the things, because we do see so much, we started what we call the Fresh Start program. And really what the Fresh Start program is you can see we've partnered with a few funds, venture funds below. Whereas customers come to us, they're looking for advice, they're looking for help. There's never been that in the marketplace before, where people are actually taking active interest in helping those brands grow. And so we've started a program. Now, I would say, this is not the major focal point of our company. It is something that is a nice to have for companies that come to us, because while I have said that brands are growing at a rapid pace, there are brands that have hit some major walls. And those major walls have occurred obviously through COVID, where a lot of the stores needed to have the necessary products on shelf. And so some of the products, unfortunately, they don't make it. And so for us, we're very opportunistic as we deal and work with our Fresh Start program, and the companies that are vetted into this program itself. We've had, one customer that we've had go through the program. But like I mentioned, we are very selective with it because it is a tough marketplace right now for any brand that's starting up to get on shelf. Again, inflation has hurt quite a few. And so we are very cautious and opportunistic as it relates to the program that we offer. Again, it goes back to we're driven with safety and quality. This is just a few of the things that we do, from USDA that are organic to kosher to non-GMO. Our facility is scored, over the last 7, 8, 9 years in that 98%, which is absolutely fantastic. And what that does is it really allows us to be at the forefront of companies. Give example, whether it be Whole Foods, Costco, Walmart. If you don't have that built out within your organization and in your facility, those people will not do business with you. So it's not something that's very cheap. And so one of the things, again, like we started this whole thing, it all starts with quality and safety because we built it from the ground up. So while we're very lucky to do that, there are a lot of companies that are out there within this space that, because they don't have this, they definitely lose business. And so that's one of the things that we take great pride in, because again, we want to be at not only the forefront of food, but we want to be at the forefront of quality and safety. So here's another thing, as we get into part of the business that we do. Again, we're very diversified, and I use this analogy a lot to a portfolio of investments, whether you're being bonds, stocks, etc. U.S. or North American stocks versus international, etc. And so we ourselves are very diversified in the customers that we have. We've got direct to consumer customers, which are your large ready to eat meal kit companies that we deal with on a pretty large basis. We've also got quick service restaurants, which are quick service restaurants are in the healthy food space throughout North America. That may have anywhere from 10 chains, stores, all the way up to 500, again, in that healthy, clean space. Then you have the brands of tomorrow, the ones that are coming out there that maybe they're coming out with new things, whether it be a vegan yogurt or a protein bite that has jelly in it, but it has no sugar in the jelly. So working with brands like that, and then food service. A big food service opportunity out there within the industry in the healthy space. And again, it goes into our innovation. And we deal with a lot of like corporate companies. And we deal with them often because, again, usually when you're dealing with large corporations, it takes them a while for innovation. And so what we were able to do, because of the things that we see, we have the ability to actually offer them suggestions and ideas for some of the stuff that they may want to launch themselves. And while they have lots of manufacturing, in some cases, they can trial things with us and move very quickly to trialing products. And they can get it on shelf to see whether or not that's something they want to continue to work with as they move forward. So I'll give you a perfect example. Because of the fact that we are diversified during COVID, about 35% of our business was quick service restaurants. Unfortunately, the majority of those customers were in Manhattan and San Francisco, which was like the hub for COVID. And literally all those stores shut down. So within a matter of 2 weeks, we lost 35% of our business. Now, because of the fact that we were diversified in the direct-to-consumer space, we took off even more and gained that sales back and probably doubled that within 2 weeks because of the fact that we were working with direct-to-consumer, and that's where a lot of the business went while the quick service restaurant went down. So being diversified has put us in a position to help us continue to keep growing this whole thing. As I talked about, we've got facility expansion. So currently we have 5 facilities. We have one main manufacturing facility that's about 49,000 square feet. The 4 other facilities, we have a 4,500 square foot refrigerated bar business that we will have made over 5 million bars this year alone, that we were running, as well as 3 other facilities that would hold our dry packaging, our refrigerated packaging, and our frozen packaging. As we've continued to grow, we've got a partnership that we're going with one of our customers where we're actually building out a multi-million-dollar bar line. And so we needed a lot more space. I think we're going to probably do, as we move into next year, it'll triple the amount of bars that we're going to make. And so we had to go find a facility. And one of the things that I went out and searched for was to find a facility that would allow us to basically consolidate from 5 down to 2 facilities. And so we've done that. We've got that. We're in the process of actually updating it right now. We're putting in 7,000 square feet of refrigeration, as well as a very large bar line. And as you can see, we've got the opportunity to grow. And because of the space, this will actually allow us to continue to grow our revenue and can help support upwards up of $100 million. Now, which is all fantastic and wonderful. But the growth that we're starting to see is that, we could, in about 12 months here, I think there's a good chance that we're already going to have to be looking again because for some of the business that we've got coming down the pipeline. So all very, very good things. As we get into some of our track record from a revenue perspective, as you can see, we've gone through, these are numbers through Q2. We should be reporting here in about a month for Q3. I can tell you that, through Q2, we've been EBITDA positive. About a year and a half ago, I set out for our company that, look, we need to continue to grow revenue, which is fantastic. But at the end of the day, it all comes down to the bottom line. And we need to start actually making money. Our first goal was to get EBITDA positive in a quarter. Then it was to start to go to 2. And now we want to get to cash flow positive. We've had a fantastic Q2. I know I'm not, as we get into Q3, I can tell you that I'm extremely, extremely happy, and I cannot wait to actually come out and put out what our earnings are for Q3. But we are growing by leaps and bounds from an EBITDA perspective, as well as a revenue perspective. The back half of our year here, we're going to find ourselves in a really, really nice place. Again, our goal is to become cash flow positive by quarter. We're right on track to do that. So as you can see, we're 8% compounded annual growth rate here for the last 17 quarters of 8%. Again, the future is very bright for us in all aspects as it relates to revenue and EBITDA. Again, how do we do that though? Look, our gross margins have been absolutely fantastic. And a lot of that has to do with the fact that we've kind of stepped back a bit, took a hard look at our business and some of the customers that we did have. Again, inflation, was hurting quite a bit. It hurt a lot of people. So, we did have to put over some price increases to some customers. But at the end of the day, the true reality is that we got back to the core of operations and manufacturing. And really, it's about managing the labor. It's about process improvement. It's continually improving the processes that we see on the floor, removing the waste that we have. And then again, taking the customers that we do have and growing more with them, and also helping to increase our margins. So looking at product mix that we have high margin on. And as you can see, we're exploding from a margin perspective. I can tell you that, from year over year, we're probably up 12%. I can see and envision that continuing to grow a little bit more as we continue to go here. As we start to bring on larger customers, and I say that in the much larger publicly traded, I do think that some of the margins will start to come down a little bit, but not by much. And so, we found ourselves in that 35, 36 range in Q2. We'll find ourselves as we move in the back half, creeping even higher than that. Again, we talked about environmental and socially focused. A quick snapshot here from 2023. As you can see, year over year, as we continue to keep growing, look, we try to buy as much produce as we possibly can. We try to buy seconds. 2.2 million of the produce that we bought were seconds. What seconds means, it's basically all the produce that nobody will put out when you go to the store to go buy apples, oranges, etc. It's ugly. It's the ugly stuff that normally people would be throwing away. That's the stuff we're using because for us, that's totally, completely fine. And so that's something we've take great pride in. We also compost. So we're composting, 100% of our waste, and we donate any produce extras. We've probably got about 40,000 pounds of compost a week that we're kind of composting away. So that's fantastic. And our team continues to grow, and these numbers are actually already stale a little bit as our team of full-time employees has grown from 110, and we're already at, 125 right now because I've got 3 lines that are on 2 shifts, 1 shift on 2 shifts, and then another line that's actually going 24/5. So we've got a lot of growth that's occurring right now. And so, yes, we're in a pretty good place. It obviously it's not just myself doing this. I've got one heck of a team behind me. I quickly through my background, I myself started in the healthcare industry as a Lean Six Sigma black belt for a Fortune 10 company. Was lucky enough to be on some phenomenal projects. Then went into the finance industry in the early stages of proprietary trading. And then from there went into the VC world, where I've been able to help, manage and run multiple companies into now what we have is the Fresh Factory. Again, got a great team behind me with a CFO who has great experience, who came from Maple Leaf, which I'm sure everybody's pretty familiar with. He's come on board to really help solidify our financials and in a way, have an absolutely clean balance sheet, virtually zero debt. So happy to have him. We've got our COO, Carl, who himself was at Diageo for many years, then was at a company called Double Good, where they grew from 50 to 250 million as he sat in that role. Really saw our mission and wanted to be a part of something special like he just was part of. So he's come on board. We've got a fantastic food scientist that manages our team in Shiva. We've got Mike, who's been with us from the beginning. Mike's got, an undergrad from Harvard, master's at U of C, is brilliant and leads our commercialization team. And then most recently, within the last 2 months, because the growth has, come on so quickly for us, and we have really so many different leads and we want to grow at an even rapid pace, we went out and found a head of sales. And Donna has got over 25 years of food manufacturing, co-manufacturing experience. And so she's come on in to help solidify and grow out our sales organization. And then lastly, we've got support. My partner and co-founder, Nate Laurel, serial entrepreneur, has started multiple companies, sold multiple companies. He's active still a bit in helping us as we kind of navigate this growth. We've also got Jeff Canalupo, who Jeff worked at Leo Burnett for about 15 years, has a fund out of Chicago, was the lead in a company called Calm, as well as Factor. Factor was sold to, which is a meal kit company, was sold to HelloFresh about 3 years ago for a couple $100 million. He's with us to help. We've got Lindsay Levin, who is the chief marketing officer at RX Bar when they sold to Kellogg for $600 million about 7 years ago. We've got Basar Exili to help us with our capital funds and whatnot as it relates to when we went public. Obviously, we see Kimball Musk. Kimball, is a chef. Not only is he obviously brilliant, but he's a chef and a big fan of the food space. And so we've got Kimball helping us when we need him. So we've got some pretty good people behind us, as well as other investors that that aren't currently even on this list that we have as advisors that are true titans within the food and beverage space. And I think, as Trevor mentioned, we're capitalization. Here's what it looks like. We've got close to 52 million shares that are outstanding. I will say, we're trading at 91 cents. I'd say one of the things that you may notice is that we don't necessarily have a lot of float. Partially that's because really 20% of the shares are tradable at the moment. The other 80% are U.S. investors that are not tradable shares at the moment. So you'll see that again, there's a little bit of a small float out there that's out there, and so that's one of the things that as we look to find some more Canadian investors, quite frankly, because we know, like right now, we've got an NCIB in place. And I can tell you right now, I know I'm very bullish on our company. I know what we're doing. I know what our revenues are going to look like. And I know that it's a really, really good opportunity where it's at right now. So So with that being said, that is the Fresh Factory. So thank you everybody for listening, and I'd love to take any questions you guys might have.
Perfect. Bill, thanks so much. Yeah, reminder to everybody that's listening, if you've got a question you'd like me to ask Bill, please use the chat function. Of course, I'll ask that question as we go here. Bill, you've answered a lot of the questions I had here, but we'll start with some of the sort of call it the capital market stuff. Now, you have an NCIB in place. Clearly, that's usually a reflection that you guys think the stock is cheap. But what other uses of capital would you have? Like instead of an NCIB on its own, where do you expect to deploy capital?
Yeah, so for us, deploying capital right now is pretty similar to the strategy that we've had over the last few years. We know that the market is a bit slow, so to speak. It's really betting on ourselves. It's spending on opportunities. I'll give you guys a perfect example. We just spent about $100,000 on a machine that's going to pay back for us in a matter of 6 weeks. So we're utilizing our capital for areas in which we know that we're going to get great return on, and it's going to be instantaneous, while it's also going to help us from a sales perspective as well as margin. So a lot of the opportunity from a capital perspective, we're looking to grow as it relates to the company itself, because look, I've got some pretty lofty goals for our company that I'd like to get us to within the next 3 years. From a revenue perspective and EBITDA perspective, we're definitely on our way there. Hoping that we can kind of quickly get to that 75-ish million in revenue a lot faster than even our models are showing.
Mm-hmm. I mean, speaking of the 75 million, you currently have roughly, I think, a $30 million run rate of revenue. What's your current capacity, and if to get to that 75 million, what would you have to do if you have to do anything?
Yeah, so look, we're at 30 million run rate right now. We have, and I probably should say, we've got 7 lines. Those lines span across a shot line that does 2-ounce wellness shots. That we also do 12-ounce to 32-ounce larger juice, which is another line, which is cold press juice. We then also have a rotary line that right now, that is another line that we're actually increasing. That thing is running 24/5 right now. Where that is, we are a little bit strained on capacity at the moment. But in December, when another new machine actually shows up, we'll actually gain that all back, and we'll be down to like 1 shift because we've increased the capacity of that line. We've got a bottling line that does dressings, jams, vegan mayos. That line is at 2 shifts right now. But again, with a little bit of investment, we can easily get that to much. We can gain capacity back. We have a bar line, refrigerated bar line, like I mentioned. It's a smaller one. In January, that'll be a full-fledged long line that will allow us to do up to 50 million bars on that line. We're looking to do about 30 million next year on that line. And then we have something else that we've built out, which is we call it the Rion line, but the Rion is basically protein bites. What's really, really hot out there right now are healthy protein bites, 5 in a package that sit right as you walk out. If you go to a Whole Foods or whatnot, you'll probably see some of the ones we make, quite honestly. And you grab a package of those, it's a better for you, healthier snack. We've built out a line. We did that actually midsummer. The customer came to us very interested in the opportunity because we had made some of their other products. Said, we're launching national on Whole Foods. We need 1 million of these things done in a matter of 3.5 weeks. We built out a space within our production area, and now we have a line there. Now with this new building, we have other equipment and things coming in so that it will be less manual, be more automated. So capacity-wise, look, we still have plenty of capacity to easily get to where we need to get to. The only thing, as I mentioned even earlier, the concern will be space. It's not that we can't produce it all. What ends up happening, it's all the inputs and then the outputs of what happened. That's the thing that we've got to figure out as we continue to keep growing, because there are a lot of pallets that come in, and we've got to make sure we've got the space to store before we actually produce the product, and then make sure we can help get that out to our customers.
Mhm. Now, I've come to understand, obviously, from the presentation, some of the revenue is driven by products that you guys own and invaded yourself, but others are customer-based products that come to
Yes.
you more or
Yep.
less co-packaging or
Yeah.
whatever the term is.
Correct.
What's the split in terms of revenue,
Sure.
and how do you grow both sides of that
Great
business?
question. Yeah, great question. So I would tell you, the brands we own, we've basically kind of put them on the back burner, quite frankly, and that's gone over the last, last quarter or so. Reason being is that again, for a small brand, you need to be funded very, very well. And so that's right now for us, it's hard for me to put money into the brand that maybe isn't growing at the clip that the rest of the business is growing at. Where again, I can go put $100,000 into something and get that back in 6 months and then continue to keep growing on that line with even more sales at a rapid pace. So, I would say that the split now, quite frankly, is probably closer to like a 95-5, where a lot of our customers are what we're making. Now, we partner with a lot of our customers. And when I say the word partner, it means whether it be deals as it relates to machinery that we go in on together, all the way up to the R&D where we will come up with formulas, new SKUs for them to launch nationally for their customers.
Gotcha. So I'm trying to think of the sales process or the idea generation. How do you grow that piece? Where do you go to get more of these guys to come to you?
Yeah, good question. So strategically, part of our strategy is we grow organically. We've got some anchor customers on each line, quite frankly, that we grow with and help them, whether it be new SKUs and or new product SKUs. As it relates to going out and getting other customers, we've been in a very, very lucky place, which is partially why we needed to bring Donna in. We have not done, and that's something that's going to change as we move forward here into the new year, where I will put a little bit more money into our own marketing of the company itself. Every lead that we get is basically word of mouth or people just finding us online. We had 100 leads in the last 7 weeks. Now, are all 100 leads going to lead to something? No, probably 70 of them are not, but there are 30 very, very good leads. And so we don't, with having only one person at the time, now bringing in Donna, now we have two people that can actually sift through that. That is the way we have had it in the past. Moving forward, data is going to drive a lot of it for us. Whether it be SPINS data, things of that nature that we are getting and analyzing to try to find the right customers that fit within the framework of what we do. Again, better for you, cleaner products. Now, what's interesting though, what we get from a lot of our leads are customers and or large companies who they themselves want to clean their products up. So they actually come to us. I'll give you an example. Had a customer that's been in the market for 75 years, cocktail sauce. They wanted to start to clean the product up. Came to us, we helped them clean the product up, and now they've gone back to market with having a better, cleaner product for them. Still the same taste, but now it's a cleaner product, and people can look at the backs of the labels and feel good about what they're eating.
Maybe give us a little more details there. When you say cleaning it up, what sort of ingredients are you taking out of this process or product?
So it'd be like, it's their additives or preservatives that are being thrown in there. It's high fructose corn syrup, taking that out, and finding other things that you can put into these products that actually help it become better for them. That's quite a bit kind of what we do.
Gotcha. Okay, let's go back to sort of the financials again. I mean, you've got a share buyback, so obviously you've got cash, but do you foresee requirement for any capital, like your expansion ideas or plans? Do you see future capital requirements, or you think you can grow through existing cash and cash flow?
You know what? I think we could definitely grow through the current cash of what we're doing right now. However, I do want to continue to keep this train moving at a pretty rapid pace. So I could envision us in the next 3 to 6 months going out to raise some capital to allow ourselves the ability to grow even faster. And as I say that, that means, again, there are other types of equipment that we could put in, helps increase our capacity, as well as we start to move forward into next year. Because of the growth, we will have to look at a potential for an even larger facility where we can actually be able to make more. And so, yes, there is an opportunity for that. We've been, look, at the end of the day, we've somewhat, done everything we can to not spend frivolously. And so I think for myself, we've been very tight as it relates to the way we've held the money. And so we want to continue that way. I mean, if we can make ourselves self-sufficient, obviously that puts everybody and investors in a great spot. And so, but the reality is, if I want to continue to grow at the pace that we want to grow at, there is going to be some capital, but I wouldn't say it's not $10 million. We're looking at, much less than that, because again, the business itself, after this quarter here, this business will be self-sufficient.
I mean, okay, so you've referenced some sort of visibility. Maybe give us a sense of how you can see forward. Like when a contract comes to you, how forward is it, and how long does it tend to last?
Yep. So I'd say as we've gotten more sophisticated ourselves, quite honestly, and the way that we've been able to actually partner with customers, look, some of our contracts are 5 years. Some of them are 3 years. Some of them, I without giving out too much, we've put some things in place to truly partner with some of these customers as we grow our business, because we're growing with them. And so they're growing at a rapid pace. We're growing with them. And so we want to maintain that. And again, in a typical co-manufacturing space, people can leave at any moment. Well, we don't want that, right? I mean, obviously we're putting a lot of time, energy, and effort into helping grow these businesses. We want to make sure that we're with them as they continue to grow and they succeed too. So, quite honestly, good chunks of our largest customers, we've got some longer term contracts in place.
And if someone were to come to you tomorrow and say, "Hey, I want this type of sauce or something that they need from you," how quick can you onboard somebody like that to running?
Yeah, if you asked me that like 2 years ago, I'd tell you we'd get it done in 6 weeks.
Yeah.
Very different story today. However, still much faster than what anybody else would actually be able to do. And I'll give you that example. That example about the bites that I mentioned, the protein bites. We, no joke, put machines in, went through the product through commercialization, and got it launched and put it in every store in Whole Foods in a matter of 4 weeks. So, yeah, I mean, look, we have to prioritize. There are a lot of projects. We've gotten much better at sifting through what customers are real, what customers may need more help. And I say more help, maybe it's even in from the standpoint of their formula, to help the formula. But when there are things that we feel like we're trying to help our customers out, we will go above and beyond. We do all the time, almost probably to a fault. We go above and beyond, but that's just who we are. And so, that's the perfect example of us launching something, national. I'll give you another example. We have another customer right this second. They're going into Costco, launching into Costco, which Costco is usually a rotation, but that makes a lot of business for people in a quarter and for their years. Same thing. Within about a 7-week time frame, took a salad dressing, able to help look at it, commercialize it, and then get it to shelf. And we're literally in the process of making it right now so that it's there in November.
So, I mean, what I'm hearing is that one of your competitive advantages is just that you're able to customize and get something out the door pretty quickly. If somebody were to say what makes you better or different than one of your competitors, what if more than that, what is it?
Yeah, perfect. I'd say our expertise in the fresh, clean space, 1. 2, we actually care about them. Funny enough, a lot of the times, again, customers or manufacturers, they don't pick up the phone. We have a team that picks up the phone. We listen. We solve problems. That differentiates us. We are constantly solving the customer's problems. And it's funny because it's not only just their food problems, it could be their supply chain issues that they have or whatever it may be. And then, I think the other advantage is we'll grow with them. There are customers that, have people that are, again, like I mentioned, they have their specific line. It only does that amount, and that's what's going to be. That's not us. We're going to grow with them. So as a customer is larger and they get bigger, we will make the investment. We will grow with them as they continue to go into the next space. or into the next line. Again, from a 40 a minute line to a 200 a minute line. We're willing to do that. I'm not sure how much of our competition is really willing to do that on multiple lines.
Gotcha. How much does M&A part of your sort of growth profile? Are you looking at any M&A?
I'd say not at the moment. I'd say that there's definitely been enough that's come across my desk of companies looking for us to go after. Look, we are going to be very open as we see opportunity. If it makes sense for us and its financial sense makes sense, 100%, we will look at it. We'll do the diligence behind it to see if it makes sense. But in most cases, it's going to have to be a pretty good opportunity for us where we are going to be able to have some expertise to help that company as well as, to make it successful. I think right now we are on a good trajectory with what we're doing. There's a little bit of, I kind of want to stay focused at the moment of continuing to grow the bottom line for us so that we can continue to show the value to our investors that we have. And quite frankly, have the stock go where it should be going and have everybody be happy with, and encouraged with their investment.
Is there any seasonality to your business?
I think it depends on the customer, funny enough, but I would say there has been in the past. I'd say like as we've gotten diversified, I'll give you the example. We make a cocktail sauce. Well, cocktail sauce is really big at the end of the year because that's, your Thanksgiving and Christmas timeframe. So that's really, really big. That'll slow down as you get into the new year. But as you get to the new year, we have a lot of customers because of the fact that it's in that healthy space. Everybody's starting fresh in the new year, right? Everybody's got their new diet. Everyone's going to eat healthy this year finally. And then after 2 months, then that kind of tails off. But then you get into bathing suit season. So now everybody's got to get in a bathing suit. So you start to see a little bit of a rise there and you get through summer because everyone wants to eat healthy. And then we get back into our winter days. So
Right. I saw a question that came in that I should have been asking. Concentration, customer concentration. Give us a sense of if there's any serious concentration there.
And are you speaking across as it relates to the sales channel, like direct to consumer versus?
Well, I guess just, I mean, my sense is you've got organizations coming to you asking you to manufacture products. Is there any one of those that outsized amount of your revenue?
No. So basically, our revenue is our largest customer is about 30%. So we've got 30% of our largest, and then a lot of people, splits into 10 maybe. Now we still have a tail, right? As we've grown, we've still kept some of the customers that we first initially had. But we still have a tail. We still have, about 30, 35 customers, so to speak now. I know at one point, a couple of years ago, we had 55, 60. I'm trying to remember back into my deck from a couple of years ago. But again, as we've started to grow and become a little bit more sophisticated, and as we've helped brands, that we've been a little bit more concentrated as we've grown the business.
Gotcha. And then it challenges. What sort of keeps you up at night running the business?
Can we grow fast enough? Honestly, it's a matter of we have a pipeline and can we get everything through? Because again, gosh, manufacturing is just not easy. In the healthy, clean space, it is not easy at all. We've done a phenomenal job. Our team and operations team has done a phenomenal job of being able to take that on. But I also have to make sure that we still have human beings that are working there. And, again, when we're growing at, 44% year over year type stuff, that puts a strain on the business, right? So what keeps me up at night, it's really making sure that we continue to make sure we have the platform in place and that structurally, as an organization, we can and are ready for that next jump in revenue, so to speak.
Gotcha. Bill, what do you enjoy the most about running this business?
Honestly, it's doing something that others haven't necessarily done. It's actually going out there and whether it's corny or not, but truly changing the way food and beverage is made in the United States. and being at the forefront of it. I think that's something that, Nate has always done, and myself, as it relates to companies and industries. It's no different than our trading industry to the energy industry to wherever it may be. Now it's in the food space. Being able to actually, influence and be able to help make a better product for end consumers. Again, I just that's awesome. Again, and being at the forefront of it, it's special. Now it's a matter of making sure we continue to keep growing it, and hopefully we can again provide honest food for everybody. And again, honest food, clean, better for you products.
Gotcha. Now, Bill, I mean, your venture capital background, you've seen a lot of deals. When you look at this, if you were to look at 5 to 10 years, what happens here? Is this bought out by somebody else? Is there an exit strategy? What happens?
It's funny. I get this question a lot. Look, I really am not trying to look that. I know that's maybe not the right answer, but really, we don't look too far in the sense like the 10-year down the road type scenario. I think for us, if we continue down the path that we're on and we continue to keep growing out the breadth of what we're doing, and the bottom line continues to keep growing the way it's growing, and the top line as well, I think there's going to be a lot of options for us. And I think that's the most important thing, is that it'll create options for us in the sense that there could be potential opportunity in the next couple of years where there's companies that we even maybe work with that are very interested in what we're doing. And at that point, if it makes sense and the valuation for everybody that's invested in it works, we'll definitely take a look at that. But really, we're focused on like the next year or two here, where we can what we can control and continue to grow. And I think that there will be a lot of opportunities for us, whether it be from a merger, whether we look to go do and attract and bring in. I just think that, we'll continue to keep growing this thing in a place that one will all be very, very proud of. But again, something that, again, people will look to us in the industry as people come to the US and say, I have to work with the Fresh Factory. Like I'm bringing food to market. I need to work with these people some way, somehow. And so that's kind of like, the motto and what we've kind of been looking at and what we've been doing.
Fantastic. Okay, so last question. We're investors watching your business right now. What do you think are the most important either metrics to watch, or maybe catalysts or milestones that we should be watching out for? What do you think makes the most sense to pay attention to?
Yeah, I'd say continue to just maintain the margins, watching our margins, and being cash flow positive. I think that's the biggest thing. Look, everything I've said over the last 3 years, we literally have done. I've said this is what we're going to do. We're going to start out. We're going to be EBITDA positive 1 quarter. We're going to make it 2. We're going to go 3. We're going to be on the year, and then we're going to be cash flow positive. That's the direction that we're going. I'd say continue to keep watching it. There's so much excitement that's going on with where we're at and what we're doing. We're a real company. We are doing some phenomenal things, working with phenomenal customers. Again, the opportunity for us was going to be endless. It's a matter of, can we continue to keep executing like we are, and keep being able to help provide that value to our customers, and so that they can continue to keep being successful themselves.
And Bill, last opportunity here, as far as a final message or a key takeaway you want to make sure everybody walks away with today about the business.
Sure. Yeah, I think the key message is we've got something special. There's something special here in the food and beverage space. I'd say that, and if I can't harp on this enough, it's all food. Again, it's not just a plant-based. While we are experts in plant-based, it's really about clean. And clean means you're not putting additives, preservatives in it. My daughter, who's 14, can actually read the backs of the labels, and that she understands it, because I know she does, and she hounds me all the time, because if she can't read it, she's not putting it in her body. So it's that type of stuff, what we're doing. It's bigger than us, quite frankly. It's really something we're trying to do to provide for everyone. And so it's better for you food across the board. It's not specific to one thing or another, but it really truly is. It's clean food.
Awesome. This has been great. We've been speaking with CEO Bill Besenhofer, the Fresh Factory, symbol FRSH on the Venture Exchange. Bill, it was great to catch up. If somebody wants more information, how's the best way to get a hold of you?
Yes, please email us. It's right on here. If you could just go to info@thefreshfactory.co. If it has to do with relations, investor relations, if you're looking for opportunities to be involved, invest, please, I'm gladly take all that. It's at healthyinvestors@thefreshfactory.co.
Awesome. Awesome. One more time, thanks, Bill. And we will make sure to keep updated and catch up with you in the near future.
Sounds great. Thanks, Paul, for having me. Really appreciate it.
You got it. Take care.